most important for us is that it will be a win-win-win. So it needs to be a win to the seller, and we need to understand his motivation and make sure that you're actually doing a fair deal. It needs to be win for the company. So the company see us as a long-term partner, and actually we bring value to them, and we can do multiple transaction. And I can tell you that currently we're actually doing a transaction to, in a company with, to many of those, their employee. So we are basically exposing the company to the possibility to allow the employee to liquidate some of their shares, and it also need to be win for us.
Welcome to 20-Minute Leaders. Just sit back, relax, and learn from the leaders of today. It's a journey. Each one is different, unique, inspiring. Let's get started. This episode is powered by J Ventures, a community-driven VC fund in Silicon Valley in partnership with Leumi Tech, sponsored by Homeward Ventures, Hippo Insurance, Upwest Labs, Synergy Global, Hillel at Stanford, Leap, Birthright Excel, Serona Partners, and in media partnership with C.Tech. Welcome to 20-Minute Leaders. Today we're talking about the secondary market. Meet Dror Glass, the co-founder of Israel Secondary Fund. He co-founded Israel Secondary Fund, investing in the Israeli secondary market since 2001, with 25 years of investment experience. Previously, he was the managing director at Nexus Global Partners, a global management consulting firm. Also former managing director of Orama Investments, member of the IDB Group, Senior Investment Manager Israel Corportaion, and the Executive Director of the Wharton Recanati Program at Tel Aviv University. He served on the boards of various private and public companies, both in Israel and abroad, registered C.P.A, and holds a B.A. in Accounting and Finance and an M.B.A. in International Business and Finance from the University of Southern California. Well, I'm really excited to have you here, Dror Glass from Israel Secondary Fund, talking about a whole part of the market and a whole part of the ecosystem that it's not necessarily that it's not too much spoken about, but I think it may be even a little bit misunderstood, a little bit underrepresented, and it requires another layer of understanding into what's happening in order to understand the different potential avenues to go there. And so I'm really happy that you're here to share a little bit about your own journey and a little bit about secondaries with me. So welcome, Dror.
Thank you very much. And again, thank you for the invitation. I'm very happy to be here.
Secondaries as a market. What is, first of all, to level the playing field, what is a secondary deal or a secondary investment in high level?
Okay, so we're actually doing three types of transaction, or the secondary market is actually divided into three types of transaction. Is buying LP positions in other funds, buy minority stakes in technology companies or in general in companies. That's what we call secondary direct. And what we call GP-led is those funds that reaching their terms, and most of them actually need to extend their terms. So we allow some of the LP to basically liquidate their position and extending the fund if required, also raising a little bit or adding more capital to support the existing portfolio. In general, I will say the secondary market is basically creating liquidity in illiquid market.
Mm-hmm.
And it's basically by that actually propelling the growth and increase the efficiency of the market. And I'm very, very happy that we're actually reaching the stage where, from a niche market, we become integral part of the market. And today there is no single person in the tech ecosystem in Israel that I need to explain what is a secondary.
Right.
And most companies and most funds will have multiple secondary transactions over their lifetime.
Right. And so I've really, to encompassing this is this idea of creating liquidity in an illiquid market. Now, this idea of secondaries, how big is it really in the tech world? Because really we don't hear too much of this in the news, and we don't get exposed to much of what's happening. But if you can just give me a little bit about the scope of where we're at today in terms of secondaries, I think that'll be helpful.
So the global secondary market is about $100 billion. The large groups are Ardian, Kohler, Lexington, Goldman Sachs, and others. The sub-segment and the very small part of it is actually what we call tech secondary. Some other call it actually venture secondary. And venture at all is less than 10% of the whole secondary market. So the whole secondary, the whole venture secondary globally is about, I would assume, something like $10 billion. So it's actually niche market in this the whole. And most secondary players globally are doing very limited secondary, and most of them doing limited amount of secondary in the VC world. Most of them will do LP position, and if they will do secondary direct, they will do it in a late stage companies. Very, very few are doing an early stage and growth stage companies in the tech world in general.
And so why? I mean, what's the friction for anybody to come in and do secondary stage investments in early and growth stage companies, tech companies?
I think actually it's a very, very different evaluations of growth companies. It requires very specific knowledge and expertise, and very, very deep rooted into the market. Part of the reason we are doing only Israeli related assets is that it's not enough only to understand what the company is doing and analyzing the global potential. You also need to understand deeply the internal notion of the company. So you do need an internal roots into those specific companies. And if you're buying a portfolio, you do need to have a valuation of the underlying asset by each of those assets differently. It's a very, very different comparing to private equity or buyout funds.
And so does this mean that it requires different sets of information? It requires deeper due diligence? I mean, what's really the jump that one needs to make in order to become active in the secondary market, like you have with Israel Secondary Fund?
The idea is that you need to have a deep root into the market, understand many different markets. You need to have the relationship that actually access those companies and to be a trusted partner. Take into consideration that in private equity, most of the cases you have a controlling entity that basically run the show. In the VC world, you have a group. It's a club investment. There are a group of investors that actually, in most cases, you'll see at least 6 investors in each company, different one, from angel investors to early stage VCs, to VC, to late VC, to growth, and some private equity. In many cases, it actually will be multiple in each stages. So it's actually group. So you do need to understand the company, you do need to understand the market, and you also need to have the relationship with the investors. And you need to be trusted by all those parties in order to be able to access and invest in those companies.
So we're talking about trust, and you've already mentioned trust in a few ways here. Tell me just a little bit about trust and when it comes to secondary investment. So if maybe even from the company's perspective, and let's focus the conversation on tech in Israel. From a company's perspective, how do they see a secondary deal? What is sort of their view? And I think that it's also worthwhile considering a little bit about how it looks, right? I mean, because you have, from my understanding, you have an active player coming in and replacing a portion of another active player. What does this mean about the company? What does this mean about the trust in the company, right? It has a lot of these different, more philosophical, intuitive questions. What's happening? Give me some order.
I always say that, substantial part or, large part of what we do is actually have a lot of psychologists. So there is people are selling. So you first need to understand what's the motivation for the seller to sell. And let's actually take the situation that you are 35, you are still not 35, but 35 years old, a founder owning 10% of a company that's worth $50 million. If he will sell his position, it's a life changer for him. But he has actually misalignment with his employees because they want him to continue, and the investors want him to continue, and the investors of his investors actually want him to continue. So by allowing to sell a little bit of what he has, like 20%, let's call it, he can actually reduce his risk, improve his standard of living, and continue to show confidence in the company and increase the alignment between him and the other stakeholders. So think about it. Actually, when we went through market education, that like I would say 7 years ago, if a CEO would sell to us 20% of his stake, it would consider that he actually have a low degree of belief in his company. Today is exactly the opposite. The VC will be the one that actually will approach us and will recommend us to speak with the founder and will try to convince him to sell to us part of his stake in order to increase the alignment between the VC and the management. So that the psychology behind it is actually try to understand the motivation. You do need to understand the different position of the different stakeholders, and they also need to accept you as a value add for long term in, as part of the shareholders. And actually, I want to mention here that basically, as a fund with a deep pocket, so we enter as a secondary in a secondary transaction, but after we actually investing, we are basically becoming as any other fund, and we will continue investing in following rounds, and we'll continue to do additional secondary, which actually opened a lot of opportunity for this specific company and this specific founder.
So it's interesting. Effectively, what you're mentioning is that there is a psychological shift in what it means to approach a secondary deal, where if before the default was that some people want to get rid, let's use the word rid as in a negative connotation, get rid of their shares or their stake because they foresee that their shares are not going to be as valuable later on, right? That's the motivation. Now you're saying, well, actually now the motivation is different. Now the motivation is that people on the inside have intuition to what's happening, and they can see that what's happening with the company, and they actually, more from the investment side, the other VCs, they're approaching you and saying, listen, there's this amazing company here. The founders have a significant amount of shares. Maybe there could be an interesting deal, and we don't have to go through the formal process of raising an entire round, of providing a new valuation and doing all of that difficult process that founders, have to do.
In general, the secondary deal with us required, uncomparable resources compared to VC or growth funds. Our due diligence is since we actually coming late to the game, so we are basically relying on the information the company has and with conversation with other investors.
Yep.
Most important for us is that it will be a win-win-win. So it need to be a win to the seller, and we need to understand his motivation and make sure that you're actually doing a fair deal. It need to be win for the company. So the company see us as a long-term partner, and actually we bring value to them, and we can do multiple transaction. And I can tell you that currently we're actually doing a transaction to, in a company with, to many of those, their employee. So we are basically exposing the company to the possibility to allow the employee to liquidate some of their shares, and it also need to be win for us. So our investors also going to be benefit. So it always need to be win-win-win. That's actually part of our, I would say, motto in the fund.
Okay, so take me back a little bit to the founding of Israel's secondary fund, and I'm curious also to hear a little bit about the perception change throughout your time talking about secondaries, because growing up I had more of an old school thought process behind what a secondary deal is, and every time I saw the word secondary I was like, well, something here isn't ideal or isn't on the ideal path for this company. But I'm actually through this conversation I'm changing my mindset as to what a secondary deal could mean. So share with me a little bit about the founding of Israel Secondary Fund and what's happening now.
I actually been exposed to the secondary world in general at 2001, when I was actually looking for a diversified strategy. I have very close friends among the VC and growth funds in Israel, and I like many of them very much. And I think actually they're doing they become highly professional and actually doing very well. I was looking for something which is actually different. Something which is actually diversified. And I can tell you that actually from 2001, I basically involved in the secondary market. So it's for a long time. And actively from 2008, I'm actually investing in the secondary market. And for a long time, we actually had to do a market education. For you, it's obvious if you are owning shares of Amazon or or shares of Checkpoint. It's obvious for you that you are allowed to sell those shares.
Right.
Why, if you are owning the shares of Verbit or ADOC, you cannot actually sell those shares? There's no reason for you to hold those shares if it's actually a major part of your asset for 12 years. And actually, in Israel, it takes between 8 to 13 years. So it's a very, very long journey. For many of us, it's actually going to be a major asset for us, and actually it makes a lot of sense to diversify and actually reduce your exposure to a single asset. So we actually went through a process or a long term of actually educating the market that it's okay for you to sell. Now, what happens is that, after market education and the acceptance in the market, it's really become kind of a standard that, employees and founders and early stage investors should be allowed to sell. And that's actually the stage where we actually can't.
Right. And obviously you have different startups like Equity and a variety of more in the space that are looking at this question of what do shares of a private company mean? And it sounds like that it's not just the market education, that it's okay, that it's possible to exercise your shares or to liquidate. It's also a question of how to do it. I mean, right now, if you had to ask me what are the different ways that I can potentially do a secondary or act on a secondary deal, either as a founder or as an investor, my options are pretty limited. I don't have that many that I can think to mind of what I can do or who I can approach, which I think is a part of the problem that you're representing, and the opportunity that you have with Israel Secondary Fund as a group that is well known, that is established, that there is trust, that has a process for doing this and has learned how to do this properly. What were sort of the big milestones for Israel Secondary Fund throughout your lifetime?
Actually, first, I want actually to make sure that we understand that actually I highly appreciate Equity B, and I think actually they are bringing tremendous value, and I think there is a room for what they do. Equity B is a platform that basically a match between a seller and a buyer. And in many cases, they will do the transaction with a very limited information. We are an investment fund. So we will not do any transaction without specific cooperation from the management of the company and full information. And more, once we actually enter the company and actually did our initial investment through secondary, we will continue to do transaction. And I can tell you that there are companies that we did 5 and 6 secondary transaction along the way to many of the employees and banks and founders and others. And we will continue in follow-on investment. So we are a pure fund that once you're actually replacing a seller with a limited resources, with a fund that can continue to support you, not only financially, also through our deep understanding of the market and the global network that we have in those companies. In this.
So it's an important distinction because you're saying, and you're reminding, and it's an important thing to reiterate because of perhaps a perception of what a secondary deal is, but you're saying there is this, it's a triangle, it's not a two-way street between you and the seller. It is you, the seller, and the company. It's the trajectory of the company. And the goal is to then, long-term, if you take a few years from the initial investment, it doesn't really matter whether you came in through a secondary or through a direct investment like another venture capital fund did, because you are as involved as a traditional player on the cap table of this company. And this is an important distinction to make.
Yeah, we are involved, but we are not as involved as VC and growth. So we are not sitting on a board. We are not coming to manage. We want to make sure that we have alignment of interest with the company management and with the other investors. And we will do multiple transaction along the way.
And so Israel Secondary Fund, if you had to look at where you're at today in terms of the landscape, a little bit about the plans forward.
I can say that, VC and growth, as I said, I think actually adding a huge value into the market. But the secondary is by far the most creative part of the private equity. And I can tell you that if 10 years ago, the only thing we did is NLP positions, today we provide liquidity to the investors, to the companies, to the funds, and to the investors of the fund. So we became very, very creative in the way we're actually doing business today. And if you think about it, actually we are basically bridging the gap between the different stages of companies. So we allow the company and management to, push forward and actually build much larger companies today compared to in the past. So we're actually propelling growth and actually adding substantial efficiency into this market.
Fantastic. And if you're looking at the secondary market in general, as it transitions and as it grows, just a little bit about picking your brain as to what's expected for us. Are there many shifts that we still need to make? Any big leaps that have yet to be uncovered in the secondary market or the way that secondary market works?
What is actually interesting to see that you actually see today that many of my colleagues actually also doing secondaries. And the main reason is because secondary has become integral part of this market. And we will see more and more. And actually, I anticipate that we will continue to see, if this market in Israel alone, more than triple in the last decade, I'm actually continue to see a very strong growth in this market going forward, at least in the 3 to 5 years to come.
I love it. Well, Dror, this is exactly why I started this podcast and the show, and to take a subject that I honestly don't know very much about and spend 20 minutes rewiring, my transistors a little bit so that I can think about it differently and I can have more curiosity to dive into it. And so I definitely know what I'm going to be spending a little bit of my time on today, looking into it. And it sounds even
some interesting reading. If you want, I'll be more than happy to send you some instant review. Please send me your contact and I'll send you tons of stuff. And I think actually it's interesting. And in general, think about what is the creativity of eBay. eBay is actually taking this expensive table that actually I bought, and the moment after I bought it, actually worth nothing. And basically creating like a virtual market where buyer and seller actually can meet. And that's basically what is the secondary market. We actually created a virtual market for tech, illiquid assets, which are very complicated and there are very limited amount of buyers, and actually created efficiency in this market.
I love it. Dror, thank you very much. Best of luck with Israel Secondary Fund. Looking for some exciting news in the future, and best of luck. Thank you for sharing your time with me.
Thank you very much. I really appreciate it. Thank you.
Wonderful.